Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. And it's the weekend, and we had a tremendous week last week with a lot of fantastic 5-star opportunities right out of the playbook. And again, congratulations to a lot of traders who had very successful weeks, and I'm very excited to hear that. And I'm just excited in general that traders are starting to piece the templates together, the opening range, the initial balance, and then the actual setups, the 3-day setups, 3-level setups, 3-session setups, and of course our day 3 breakouts and our larger scalable opportunities that build from high of week, low of week, low of week, high of week opportunities. So congratulations. 1% better every day is the motto, and what that reinforces is that there's always room for improvement. There's always something to learn, not only about the market, but about ourselves, most importantly about ourselves, because trading is a performance profession. And as I reiterate, and I know that many of you know this already because you're trading and you're pushing the limits on yourself to improve, and you know that it boils down to preparation, planning, and the ability to execute in live time. And the consistency behind that is what will help build your confidence, not only in producing the results, but your confidence in holding on to your trades when you know you're in the winning, you've identified the level, the setup, and the trade plays out. And as I say, I will repeat this phrase over and over again, and I defy anybody to challenge it and prove otherwise, but every single trade is either going to be a pump and a dump, or a dump and a pump, whether it's going long or going short. And as I get asked this question many times, is this type of concept or this concept? And there are only 2 types of trades: buy setups and sell setups. That is it. There's only 3 things that markets do. They break out, they pull back, and they trend. They break out and fail and reverse, or they trade up and down in a high-low trading range. That is it. That is the only thing that markets do. We'll just run through the process, and again, talking about timings, levels, and the setups, because instead of in the past, as I talked about, the key turning point, the biggest key turning point for me was focusing on setups, not trying to read the price movement and predict and catch moves, but actually standing back and understanding that they're going to move in the session. They're going to move over the course of the day and the course of the week, and we're going to get larger opportunities because they're building order flow. They're building a box. Price is always in a box. We can start with just a 100-pip box, but if the market has broken out of that 100-pip box, we redraw our levels, and it's as simple as that. And I will say these things over and over again because repetition is what will reinforce your learning, and you'll see the same things over and over again. Most extensions of ranges will be 25 to 50 pips. We have a market that broke out on Monday and reversed and failed. That gave a short trade in Asia at the high of the week, the high of the day, the high of the session for traders maybe who are trading in Asia. Now this is still on the front side of the move if they sold it up top, but again, heading into the London session, we have a market that breaks down. We get a lower low, lower high, and pumps back up before dumping at the end of the 12 candle window, which gave a small continuation low-hanging fruit trade in the US session. So again, identifying a breakout that failed and reversed. If they break out and we have breakout traders in the market, the next logical possible place they may head to is the low of the day, because we have other time frame traders that are now potentially trapped up high at the beginning of the week. They triggered breakout traders at the beginning of the week. So another thing to consider with all of these opportunities is that they will often trigger one side of the week, even if it's going to trade in that direction. they will trigger at first on a false break and reverse that, because that puts pain into the first mouse. It stops them out. It might margin them out. It might be the high of the month and it may never come back. Don't know. But it's the concept of understanding when they trigger these levels and it fails, the next logical target is going to be the low of the day. Now that put in place at the close of Monday, that gave us our first red day. Formula for first red day is a pump up day and then a day that closes below the open. We have our pump up day on Friday that continues into Monday. There's the pump, 3 levels of rise plus, goes 75 plus pips, and it ends up being 100 from top to bottom. They reverse, and that market then becomes our first red day after the pump. And they pump that market up 1 level, 2 levels, 3 levels of rise into the London session. If you're trading the British pound or you're trading the London session, it might be smart to follow the British pound. Now, as we know, instruments can trade well in any session during the week. You might get a fantastic Asian session trade on the British pound one day out of the week because of how the template may unfold and set up. But there's a classic textbook perfect first red day trade on the British pound on Tuesday for a huge scalable opportunity for shorting. And so coming back to the beginning of the week now, we have our opening range. That's the high and low of the week on Monday. They've gone first red day to the low of the week and expanded the range. That now becomes our high-low for the week, coming back to initial balance, which we talk about in the playbook on page 40. And we did a video just before Christmas about the beginning of the year, the opening range and initial balance on the daily time frames for the opening month opening range. So very important to understand. This is a really important concept which we will blow through in this video, because this is something that, again, when you understand that defines the boundaries for 80% plus trading times, that gives you a high probability of understanding when you're getting a low of the week, high of the week opportunity in your session. So once we have the high and the low of the week in place, and we've just had our first red day trade, we can still develop our thesis over the week. And obviously, if you're following other instruments, then you're going to be able to target these high probability setups and just filtering out which ones are set up the best in your session. So for example, for traders who came along later and traded the US and were looking to continue to trade the pound, this is where chasing the hot chick example, that phrase where, again, they're chasing the one that appears to be moving. And I talk about if it moves before the session starts, be very suspicious. They dump it down before the window opens. If they dump it down before the window opens, what should we be thinking? Dump it down for the pump. Now, for traders who have told me, they've messaged me, they've said, I keep getting in earlier, I'm getting in caught. Step back, understand the importance of timing. If they dump this down heading into the window, first hour down, when could the second hour or the trade opportunity potentially be setting up for? Second hour, or at the end of the second hour, or potentially maybe in the third hour. So we come back again now looking at numbers, and if most extensions, stop hunts, liquidity triggers, whatever you want to call them, doesn't matter because there's numbers and timings and levels, that's it. We go 25, we have our strike zone at 25 pips below the range. If it goes through there, it could be 50 pips. But when we go to our smaller time frame, we can look at the 5 minute. So we have our strike zone set at the 25 pips outside of our breakout zone. We can use the 5 minute. If traders aren't comfortable with using the 1 minute, the 5 minute is fine. If you understand the time rotation and then the behavior of price at the level, then you understand it's about the level and the timings. So we have our 3-bar reversal, our pin hammer, after we end the second hour. This is after New York has opened. We've gone down, they've pinned the low, they've gone down into the low at our quarter level, 75, below the double zeros, not getting down to 50. We get our pin hammer right 5 minutes right into the third hour. Now, our universal criteria for entering this on the 5 minute is met, and the market proceeds to march back up. Now, I'm not suggesting that buying the low of the day, catching a falling knife is the ideal entry. This is actually a low of the day long opportunity where they shorted the market. They dumped it down prior to the window opening, and it went outside of the 100 pip box. It triggered the previous day's low in the London session, so we've already broken out of the low of the day. They dump it down prior to the 12 candle window and proceed to go lower before reversing at the quarter level outside of our 100 pip box. The first target will be the high of the session, but then remember, we have breakout traders in the market at the low of the day. So traders who are looking for the low-hanging fruit continuation, this is your red flag right here. They dump it down before the window opens. If you're looking for low-hanging fruit, this market needs to pump up, work the high, and then dump, not dump down. If they dump it down, you're looking for the pump. So now coming back to our day count, we have Monday, day 1, Tuesday, day 2, we're on day 3, and we're in the bottom of our 100 pip box. We're in the bottom of our 100 pip box. We've put a low of the week in place in our US session. We have volume being accumulated in the bottom half of the box and in the lower quarter now, heading into our US window. They're getting traders shorting down into the low of the week in the London session. And we have a market that pushes up in 3 pushes, breaks the lower highs of London, the high of the day of the London equity hour open, higher highs on the inside. Think dump and pump. There's our dump and pump reversal in the US session from the low of the 100 pip box, going after traders who were short on day 2 from our first red day trade setup on day 2. A day 3, 3-day setup, low of the week, short squeeze in the US session. And our universal entry criteria from the playbook is met in the US window at the New York Open for a vertical explosive trade, 75 pips below the bottom, at the bottom quarter level. So we're down in level 1 again. Remember, 3 levels: buying level down low, selling level up top, for an explosive 75 pip trade. On Thursday, day 4, we have a market that triggers breakouts at the high of the day, puts a high in place, and gives a selling opportunity in the London session. Remember, we have a break in structure, a lower low. We have our low of the day, so right when the Europe window opens, we have our low and we have our high. They break out of the low and explode to the high of the day. That lower low is our break in structure. Break in structure on the inside is the pump and dump setup. Pump and dump for the short trade at the high of the day. Now we have a market now that breaks down lower again. Another break in structure on the inside. We had major red news that wicked down through the low of the day. We talked about this as a potential short trade in the US session because that is now a failed breakout. The failed breakout that pumps back up, 1 push, 2 push. We have major red news, 3 pushes into the high. New York Open pin hammer. At the close of this pin hammer is the New York Open at 9:30 a.m. New York time at 00s for a high of the day short trade at the top of the 00 box. There were 2 opportunities to enter this trade on the universal 5-minute criteria, and again right at the New York Open, the engulfment at 00s, and then the right side of our M structure at the New York Open. So this lower low on the major red news forms another break-in structure and the anchor point for the pump and dump for an easy 30 to 40 pip short trade back through the low of the session. And heading into Friday, we had major red news again in the US session. This market drops down below the 00s and an example of a market where we have a US session high, a US session low and an Asian session high that breaks down below the double zeros and essentially trades sideways in a trading range. Simple trading setups, not saying that the pound, you had to trade the pound or anything else. My point is the process. You should be able to be up to date with each one of your pairs and just scroll through and have your lines, your levels, and then understand when you go to the screen in this session that you're trading. So for example, obviously no opportunities in Asia except for Friday maybe. But British pound, if you're trading London, ideally the British pound may be your instrument of choice as one of your basket of 5 or 6 instruments where you're trying to target the best trade setup each day in the session that you're trading. Just run through the process again. Like we'll take, for example, if your session is Asia and you're following the Japanese yen, we have Friday's high coming into Monday morning. We have Friday's high and we have Friday's low. The market opens up and we've already dropped down from the high more than 75 pips. They've dropped more than 75 pips and it continues to drop into the beginning of the day. So now we would be thinking 3 levels of 50. So instead of 3 levels of 25, we may potentially have 3 levels of 50 as our 3 levels of drop. The market drops before the session opens. It's already dropping down in the window. If it drops down before the session starts, think dump and pump. If it moves upwards before the session starts, think pump and dump. They're getting you to chase the move. We are also in the bottom of a 100 pip box. So coming back to levels. So we've come from an upper 100 pip box. We've dropped down into a second 100 pip box. We'll change the color here. And we have now 3 levels of drop, 50, 50, and 50. So if you're trading the Asian session, first hour puts in a high and a low. So now we may have our low in place. Second hour trades down into the low. In the bottom of our 100 pip box, our universal long entry criteria from our playbook on the 5-minute chart is met at this candle, 10:30 p.m. New York time, at the bottom of our 100 pip box for an explosive 100 plus pip long trade into the open of the Europe session. So back to process, we have a low-hanging fruit continuation trade on day 1. Day 1 establishes our high and low for the week potentially. So we've broken outside of our 100 pip box into the next 100 pip box. And then that market proceeds to go into the close of the day. But we get a break in structure, at the open of the Europe session. They break out of the low from the Asian session before pumping back up. So a failed breakout at double zeros, before coming back inside and going vertical and breaking out at the high of the day. This lower low though now, 2 things, is a break of structure on the inside, but that failed breakout gave traders a long trade into the open of the session, the US session, lower low and then a higher high, the break of structure on the inside, failed breakout, break of structure, and then a parabolic setup. So go again and look at your parabolic setups in the playbook. Parabolic 3-session setups on page 87. Parabolic 3-session setups on page 87 in the playbook. For a vertical explosive move from the bottom of our 100 pip box again, straight up through the high of Monday and the high of our week. Universal entry for our 5-minute criteria was met at the quarter level. And again, this is where timing comes in because it's our new 15-minute candle 30 minutes into the first hour. And then the New York Open goes vertical. And for short traders, so again, we have long bias traders, and we can also have traders who are looking for the reversal at the high of the week. We have our little 3-bar reversal beginning of the 3rd hour right at double zeros for our short trade at the high of the day, the high of the week, and the top of our double zero box for a very lucrative opportunity to short back down into the low of the day, the low of the session. And that also culminated in our first red day. We have a pump up day, Monday, Tuesday takes out the high of the week before reversing and closing below the open. Pump up. There's our pump day, then our first red day, and traders in the London session had an opportunity to take a short trade. The first red day is a selling opportunity for shorting at the high of the day, high of the session. That gave traders a first red day shorting opportunity just underneath 50, heading into our London open that took out the low of the day. It broke through the low of the day. That's a break in structure. Break in structure, if we're looking for the low-hanging fruit, we need the pump up for the short trade back down. Pump and dump. Pump and dump, or dump and pump. So breaking structure down, we're in a low-hanging fruit trade. Low-hanging fruit is page 96 for the trend continuation. And that now becomes our day 2. Day 1 is the false break at the high of the week. Day 2, coming into Thursday, we have our day 3. Still on the front side of the move prior to the window opening. They break structure on the inside at the low of the week. Sorry, the low of the day. That's not quite the low of the week, and we're at the bottom of our 100 pip box again. Very important to pay attention to the numbers. Bottom of our 100 pip box. We get an engulfment consolidation in the gap time after breaking the front side of the move. So we have a higher high on the inside. That breaks structure. We also have a break of our front side of the move from the high of the week on day 3. Consolidation, pin, hammer, doji, right at the close, heading into the Europe Open for the explosive reversal and 3 pushes back up to the top of our 100 pip box. Major red news. We get a long re-entry on our 5-minute universal criteria for a low-hanging fruit continuation trade back up through the high of our major red news pin into the upper 100 pip box for a nice 50 plus pip move through the high of the day. Heading into the close and breaks down prior to our Asian session 12 candle window. This formed a half Batman type of scenario, but this market drops down before the session starts through the low of the US day. You'll notice it doesn't break out though, but it dumps prior to the window opening. 1 push, 2 pushes, 3 pushes, new hour starting, breaks higher in our just below our quarter level, our 75, and then breaks out back up to the high of the day, the high of the session. We're now in a trading range possible situation. We have no break of a daily high or low. We're trading sideways between double zeros and the quarter level and 75. We are now in a trading range. So this market gave a low of the session opportunity in Asia. Again, not suggesting that this is an ideal situation, but I'm talking about the process and understanding how, when they dump it beforehand, what we should be looking for, and then it's about levels, reversals, trend trades, whatever that may be. But the process is what will keep you out of chasing moves. It will keep you out of low quality trading environments. It will help you identify scalable opportunities, and depending on the session that you're trading, hopefully help you identify the best instrument to take a position in based on the template, the daily levels, the box, the 100 pip box, and the timing. So focus on the process, be prepared, filter out your instruments, know exactly where you're at with the opening range, the initial balance, and then identifying which pair may be giving you a signal day. So remember, hindsight does pay. Contrary to popular belief, hindsight pays big time. Any session can offer you a best trade setup if you understand the process and how to identify the best setup in the session that you're trading. So keep it simple. Enjoy your weekend. Keep going and keep it growing. And may the markets go with you.